Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good Saturday morning. Welcome to another edition. It's Florida Talk Real Estate. We got you for the next 2 hours of infotainment. And thanks for being there. Whether you're on the old radio, 92.1 or 101.7, thank you. We salute you. Maybe you're on your free download, your iHeartRadio app. We're worldwide at that point. Feeling pretty awesome about that, too. Thanks for being there. And, of course, we do live stream as well on a Saturday. You have options as well. Florida Talk Real Estate. You can find us on Facebook, live streaming, and on YouTube as well. That's Florida Talk Real Estate, LLC. If you're with us right out the gates, thanks for being with us. If you're not, always remember you can go back and revisit the beautiful faces. Oh, yes, some beautiful faces and lots of knowledge. 2 hours of infotainment is what we offer up. And, of course, you're always welcome to be a part of it. Toll free, 877-927-6969. Questions, comments, concerns in the world of real estate. Don't be shy. Dial up it. First voice you hear, there's the melodious tones of our producer extraordinaire, my brother from another mother. Jimothy, how you doing, dude?
Doing mighty fine. Good morning, Johnny. How are you?
I'm awesome. Thanks for propping the door open for me this morning.
Problem.
I'm like, nice. Look at that. Somebody knows me already.
I looked at the clock, said, well, getting kind of close for the get studio.
It's about that time. As always, a pleasure, my man. I'm your old buddy, your pal, Johnny C. here, Traffic Control. Let's get your very important people. You're starting to line up on a Saturday morning. There's Mike Rauch. I haven't said this name in a minute. He's the mortgage guy from the mortgage firm. Good to see you, dude.
Good to see you, brother. Yeah, I guess it's been a little. I was back, but you weren't.
I wasn't.
Yeah, and then you were back, and I wasn't.
Right.
And yeah. Thanks for that nice intro, VIPs, huh?
Yeah, well, of course.
Beautiful. Beautiful faces and VIPs.
Well, you were not.
I wasn't in the first category?
No. You were not paying attention enough.
Oh.
You're also the starting lineup.
Oh, the starting lineup,
Yeah.
the VIPs,
That's
beautiful people.
Yeah, you got to round it out. Yeah.
The trifecta.
Good to see you.
Nice.
Wow. I hate how you took it negatively, not part of the beautiful people. Wow. Straight to the negative.
No, that's self-deprecating humor. It's one part of my repertoire.
It's one of the things I love about you. Yes. We go very well together.
I know I'm beautiful. Don't worry.
Of course. I don't need you to tell me. We have Hot Ross over here too, y'all. If you know what I'm talking about. There's Ross Komarinetz with Brightway Insurance, Juno Beach. How you doing, Ross?
Oh, Ross Komarinetz. That's what I heard.
Ross,
you were talking to when you said the first part.
You're like, what the?
Ross needs that constant affirmation, right? Hot Ross. That's why he insisted on that name.
Yeah,
right?
He wants it updated like every month too.
Yeah, that's not actually my real name, but I heard her do that, so I changed my name.
Right, got the name package for your desk.
That came before my name.
It's a business. It's on a business card.
Like when I talk to people, I'm like, all right, let me get your proper name, like it is on your driver's license.
Right.
Ross pulls it out. He's like, hot.
It's hot. H-O-T, like
H-O-T.
Like hot,
Ross.
like it is outside.
The first.
H-A-W-T. Hot.
Hot. And speaking of hot, let's get to our fearless leader, y'all. 13 plus years now, I've told you he runs a top producing Keller Williams team, the Florida Home Pros team with Keller Williams Innovations. There's Jimmy D. Jim DePola. How you be?
Hey, I'm doing good. I think we're having technical difficulties with our Facebook and YouTube stuff because we have 0 people watching us right now, but we're live on both things. So I don't know what's going on with that.
That's got to be technical.
So, yeah,
it has to be.
There's no other. No other
I'm
explanation.
taking it. I'm sticking with it.
It's got to be at least 100,000 on there by now.
Whoever just came on. Welcome.
Thanks. Good thing we overcame those issues.
Yeah. Now we increased our watchers by infinity %. We went from 0 to 1, so it's infinity % increase.
I mean, there could be regional outages, right?
Yeah, true.
Yeah, really good. Small pockets.
Sure, that's it.
Yeah. Small pockets of internet are coming back online.
Rolling blackouts.
Hey, we have a lot to talk about this week. The monthly market report came out this week, so it's going to be interesting to kind of take a look at that. I'm seeing a couple little bit of trends. A little surprising, what's the weakest county of the 5 that we cover normally? which is Indian River. Well, let me take that back. We do Indian River, but I didn't do the research for that this month.
Oh.
I did Martin County, St. Lucie County, Broward County, Dade County, Palm Beach County.
Okay.
Out of those, one county is the weakest. All the other ones are pretty much the same right now, but one has not tremendously different, but numbers that are weaker numbers for sure on a lot of different levels. So we're going to talk a little bit about that.
Well, one has a lot less volume than the other.
Yeah, I know.
One definitely stands out like a little different.
I'm thinking of Sesame Street as I'm saying this.
Yeah.
So we're going to talk a little bit about that. We're also going to talk about interest rates, because we really haven't talked about interest rates in a very long time because of what you guys were just talking about. We all haven't been in the room together. It seems like when things are coming out.
I mean, what's there to talk about?
Yeah, good news is we haven't missed a whole lot, right? Hey, how's the rates? About the same.
Yeah.
Okay, good.
And we're going to talk a little bit about that. And we might end up talking a little bit about loan qualifications, about employment and distance requirements, because a lot of people don't really know about these kind of things. And we're going to talk about that probably. And also the 8 most common reasons why deals have fallen apart. Supposedly, according to the National Association of Realtors, we've had more canceled contracts, highest percent of canceled contracts in the ever recorded since they've been tracking them. And so this is across the country. People are just backing out of deals. Buyers are backing out, sellers are backing out of deals.
Oh, so it's not necessarily financing's come crashing down at the end. They're pulling the plug for one reason.
Yeah, or another. And financing might be part of it sometimes, but there's a lot of other reasons that people don't even think about. So I thought it'd be kind of interesting. It's like,
that is.
Why did deals die? And talking about that. But before that, we always like talking about any kind of scams to stay away from and things like that. One of the things that I feel as a recent example is there's been a lot of stuff in the news lately. Why use a real estate agent? Why don't you just go ahead and buy your house, sell your house directly to a buyer directly? And usually what they mean by that, those advertisements are run by institutional buyers that want to buy your house directly without a real estate agent.
Oh, I didn't know that.
Yeah, and they're talking about, how to get cash for your home, a median offer, cash for your home. Why go through the hassle of staging the house and hiring realtors and have people traipse inside and outside of your house trying to get that offer.
So a for sale by owner pitch. Typically, the person pitching it wants to buy your house.
Mm-hmm. And they say, we'll automatically give you an offer. Just type in your address and we'll give you an offer. You could tell me, if you're seeing me on air, you're seeing me take a big sigh right now. It's very frustrating when I see that. And this is why. Unless you really don't care about losing maybe 25% of the value of your home, and I'm not joking about that.
Potentially, yeah.
25% of what your house is worth. Unless you don't care, it's like, I don't care if I lose that money. Don't do that. It's okay to get a quote, but don't get hornswoggled into the pitch until at least you talk to a realtor to find out a good realtor, to find out what you can get on the open market. All those institutional investors, they have ratios that they buy their houses for. And the offers they're giving you is assuming that your house is in the condition that they expect it to be in, based on the comps that they're doing. So like a regular flipper person, like we buy houses for cash kind of company, they usually start off their offers at a maximum amount that they would pay is 65% of what the house is worth, because they need that 35% for the spread for the profit.
Yeah, they got to have their margins. They got money to put into it, and then they got to make money when they flip it.
Right. You have costs that they got to pay for. And then a lot of them will start out at 65% and then take out the repairs on top of it. So you might be So you might be getting 52%, 50. I just did one yesterday, was calculating for myself as an investor. And based on the repairs and everything, what I was comfortable to turn in was like 57 cents on the dollar. Now, this house, the reason why I did that is because the house has been very hard to sell. And I was thinking, well, let's crunch the numbers like an investor and see what it would cost, what it would sell for. But most people are not in the situation of the house I'm talking about, which needs everything. Most houses are just dated, or they got an old roof and the owner doesn't want to deal with the roof, and they're terrified that the roof is going to like blow up in numbers, and they don't want to deal with it. So they're like, I'll have one of these investor companies. They're giving me an offer, right? But what you don't know is that when they give you the offer, there's so many costs involved in that too. They have different costs than you would have in a normal real estate transaction. A normal real estate transaction, you could right away do what's called a seller net sheet. And you could break out, like, Johnny, when we go to sell your house, we're going to do a seller net sheet and say, Johnny,
we kind of did one sort of.
We've done it many times.
About 3 weeks ago.
Yep. And we sit down and we figure out, if we sell the house at this price based on current sales right now, this is what you should net in your pocket. And all the costs, every penny, is broken down in that formula. Okay. Well, when you're buying direct to institutional buyer, they have their own forms and their own process. They don't have to comply with National Association of Realtors regulations. They have to comply with state regulations, right, and federal regulations, but they can put in any costs or pad anything they want in there. So they have these service fees and this fee and that fee.
You mean when they're showing it to you, like, oh, here are my costs. You're saying there's no, they can make it up.
Yeah,
kinda.
they just make stuff up.
Yeah.
Like I just came back from Vegas a while ago, right?
Oh, how many resort fees did you get hit with?
Exactly. And
Yeah.
now there's a thing called a CNF. It's a customer something fee.
You can request to have that wiped away, and 9.5 times out of 10 they'll be like, "Oh, sure, we'll get rid of that for
He's
you."
about to save YouTube videos I watch.
Well, that's just junk. It's just junk they put
But
on.
yeah,
there.
it's just junk stuff. And that I've seen these. I've seen.
What is
customers in
CNF?
my-
Like, what does that even stand
It's
for?
the undercoating of the
It's
Vegas
called
world.
customer something fee.
Junk
Customer
junk
yeah.
fee. They
Yeah.
might just even put fee.
Right. Yeah. I mean, so there's all these fees. So a normal sale for a seller is going to cost roughly, and this is if they pay on the higher end for commissions, right? The higher end of what people are getting for commissions, 9%. That's the real estate commissions plus the closing costs that a seller would need to sell the house, right? So if it's only 9%, and let's say your house is worth $100,000, you know that if you put it on the market after the cost, you're probably going to get $91,000. But if you're with an institutional investor, and let's say they're willing to pay 65 cents on the dollar, you're getting $65,000 versus $91,000. Now, I don't know how many people are willing to walk away from 20-something thousand dollars in this guy per $100,000. And that's what they need to do in order to make it work for them.
Right.
You're paying a huge convenience fee for not showing your property, not staging it, not dealing with the roof. You're paying a huge convenience fee is what you're paying.
Do they put well, I guess every contract is going to be unique, right? But because the verbiage can change, right? Everything is pretty much negotiable, right?
Mm-hmm.
But more times than not, inspection is going to be waived in these situations, right?
Oh no.
Well.
That's
So I mean, you're not even in a position of power. If you know you got a jalopy and you're like, man, this thing's never going to clear inspection.
Oh yeah.
I'll take your 65 cents. Like if you're hosing them, you think you are. That's one thing.
And this is what happens when they do the report. They go in there and beat you up really bad with that report and scare the bejesus out of you.
Because you've already said yes.
Right.
And now they have a little bit of latitude to get you to, it's going to be harder for you to back out.
Oh,
so you're just not
Johnny.
even really put in any kind of.
Oh, Johnny, I wanted to pay $65,000 for the house, but I didn't know that your roof was 22 years old.
I
and
can't
your
lose
AC
money.
is 8,000. I can't sell 8 years old. I can't sell a house with an AC that's 8 years old. So we want to give you $52,000 now. And then you say, no, I'm not going to take $52,000 for a house. It's like, well, you're going to have to deal with these problems. And they already know that you're afraid of doing that because you called them.
Right.
Or you can't do it.
It's
don't
like
have the
the worst
ability,
you can't.
negotiation
Yeah.
you could do. It doesn't hurt you to go ahead and do that, but you should definitely talk. And I would talk to the real estate agent first, even if you want to make that call, just so you don't get hornswoggled into signing a contract before you get to look for the second or third opinion. Most realtors will definitely give you a free consultation to tell you what they would do if they were getting the house for sale.
I would think
Right?
so.
Yeah.
Yeah.
Some of them, are very high pressure and they're going to pressure you. But So that, that to me it isn't a real scam, but to me it's scammy. It's like there's
predatory.
Scamming. Yeah, it is.
And there may be circumstances where like taking one of those flipper style offers makes sense for you because the house just is never going to sell for anything. It's not going to sell at all, or it's only going to sell to something like that. But the distinction is you don't deal directly with the professional who is your, adversary. I don't know if adversary in the contract, but the other side of the contract is the professional and you're the amateur. You have a professional helping you make sure you get the most of what you can get on your side. So professional dealing with professional.
And
essentially.
there are times where those kind of deals work out, and we actually use them. I have investors that we have in our database that we call up when we know it's that kind of house, and that's that they don't have the wherewithal to deal with the problems. We know the problems are coming up. Regular buyers are going to not be. They'd either be too scared or don't want to take the time and effort to do the issues. So you're going to have to sell at a lower price for somebody that's willing to deal with the problems, and that's a normal thing. But most houses are not like that. And if you've got a 1985 kitchen, but it's functionally sound and the doors aren't falling off, and you have appliances that are only like 12 years old, but you got a 1985 kitchen, that isn't a reason to go rushing over to an institutional lender, a borrower, buyer, and say, hey, I don't want to deal with this. A lot of people will buy a 1985 kitchen as long as it's priced correctly for the neighborhood, and they want to get into that neighborhood for whatever reason, and they're on a budget. As long as the house is functional, they'll take it and fix it up over time.
It's funny. I think am I more scared of a 1985 kitchen or like a 2005 kitchen? Just based on like building materials and like the quality of construction, like which one,
right?
Not saying 2005 is a bad year, but the different materials were used.
Chinese drywall.
Yeah. Right? Well, there was stuff like that.
We were in there. Yeah.
Hey,
the appliances from 85 are probably still going strong.
I mean, it might be avocado, but it probably works like a chair.
Yeah, right, exactly. Now, the other scam that I want to talk about is a real scam. And I noticed that there were a couple articles in a couple of different states, and it's kind of related to radio show podcaster people scams.
Oh,
and I
really?
thought that was kind of interesting.
Podcaster scams.
Yeah, podcaster.
877-927-6969 if you want to get involved with this scam.
And if you use the word hornswoggled in your call, you get the bonus points.
Did I say that today?
I love it.
Did I say that today?
Oh, yeah.
Well, yeah, twice.
Did I say that? Oh, I didn't even know I said that because that sounds like I said that.
I love it.
I used that word. Hornswoggled. I don't even know where I came up with that word.
Now you came up with it.
No, well, I don't know why it's a basic part of my vocabulary. Let's put it
You
that
look
way.
it up on
I don't know why.
Wikipedia just now. He came up with it.
So there were two like podcaster / radio show people that have been busted for real estate scams. One guy was in Boca Raton and the other guy was in Ohio. This guy in Boca, he was running around telling people how he was going to take their money and get between 200 and 338% return on their money.
Let's go,
right?
Bernie Madoff.
With 100% money back assurance guarantee. And what he was going to do is pull these people's money and then buy houses to fix them up and sell, and that they were all going to profit participate.
Right? Yeah.
Of course, that isn't what happened with this guy, according to the feds. Yeah, can you imagine? It's like, I know, right? Huh. According to the feds, he ripped off at least 16 people. This guy, he wasn't very good at this because the other guy in Ohio was going to, clean his, eat his lunch. This guy only took about $410,000 from the 16 investors. And of course, he was just he was paying Peter, he's robbing Peter to pay Paul, the total Ponzi scheme. But also he was just he wasn't buying any real estate. He was just like buying cars and, all the typical junk that criminals do when they get money, right? They just blow it on stuff. So this guy got busted. He is being charged with, let me see. Hold on. What's the actual? He's charged by the SEC and the Florida Office of Financial Regulation. The guy was only 27 years old. That's another thing. This guy was really young.
Did he have any kind of following at all? Or did he just unfortunately rope in a bunch of like his folks, friends.
I don't understand why you don't even try.
Right?
Right, just try.
Try,
Yeah,
buy
and
a property,
Or
make
at
it
least
look like
do
you're trying.
something
And
that,
if
like,
you-
buy a different business that maybe spins off maybe a small end. Maybe you
or
can.
if you tried and failed, you would have an out.
Yeah,
Right?
Like at least
Because it's like,
buy
I
something
did
and be
it.
like,
I
I'm
just-
trying.
I just didn't do good. Sorry, guys.
Yes, I know I
right?
have all these boats, but
You didn't plan that far ahead.
yeah, well, no.
Yeah.
Usually the criminals aren't the smartest.
Right. It's just like, how can I get a bunch of money?
Right. But did he have a following? Because you said he's a podcaster, or is he just swindling his folks' friends? Because
I have one of the articles, and
dude.
the other one, it had a sign-in thing, and I can't get back into it to find where his thing was. But he was like a YouTuber guy, telling everybody, "Hey, I'm this great thing. I'm greatest thing since sliced bread. Give me your money. I'll turn it into a lot of money."
Oh yeah.
Now the other one was
he didn't want like Amazon gift cards. He didn't
Yeah,
want.
right.
He didn't want
No, he wanted
Nah, give me your little cash. We're gonna.
But he was a little one because he only took 410,000 according to the feds. This Ohio real estate agent who also had their own podcast.
Whoa, that's getting too close to home.
He took 7.3 million in his Ponzi scheme.
Wow.
7.3 million.
Yeah, I think he had a little bigger following.
So this guy,
Hornswoggle.
this guy was convicted. Now this isn't charged. He's convicted, and he got sentenced to 70 months in prison and got to pay back $5 million in restitution. Good luck with that.
You can earn that kind of money in prison. I think.
He called himself
certain ways.
He called himself the cash flow king, and he wrote a book called Man on Fire, where he was talking about how to generate passive income through real estate.
Huh.
And of course, he was doing the same thing. He was taking the money, robbing Peter to pay Paul in the Ponzi scheme, and then using it for his personal stuff.
What chapter is that in the book?
I know, right? Right. Hey, Man on Fire. He said, use the money to fund his lifestyle, such as a large home on Lake Erie, courtside seats to the Cleveland Cavaliers games, and use money to pay credit cards and support his fitness business. So this guy got busted 70 months in jail. Look, these investor things.
So they're going to sell all his property for the restitution. I mean, they can try to get some of that restitution, right?
If he has any property, he might not even bought
he
it.
had a house.
Oh, that's true.
Yeah.
Yeah, he bought some stuff. Yeah, that's
And
true.
he took what, 7 million, and he's only got to give back 5.
Yeah, I don't
It's not
understand
bad.
how
That worked.
Yeah,
It's not
yeah,
bad.
yeah.
Sounds like he's winning.
That's
Yeah.
the last chapter in the
Right.
book.
It'd be like, let me do some math. Would I make 2 million in 5 years? Nope, I'll go to jail.
Yeah, exactly. Exactly. That's what I was just
Yeah.
about to say.
It's like the pharmaceutical companies, they know they're going to
Yes.
make 12 billion, but they'll get fined 3 billion.
They're like,
Okay,
Yeah.
all
no
right,
worries.
I think that'll work.
Yeah.
So with these investment things, guys, be very, very careful. Know your numbers, and really, anybody promising you like a guarantee, if they're saying invest in real estate, buy a house, fix it up, flip it,
rub
buy-
it down. Oh no.
buy a house, wholesale it,
Come on.
buy a house or wholesale it, which means you don't really touch it. You're just flipping the property without touching it. You sell it to somebody else. And they say you're guaranteed to make money. You're not guaranteed to make money. Now, if you do it right and you educate yourself and you understand the market really well, do you have a likelihood of making money? Absolutely. And maybe a great likelihood of making money. But you got to know all that stuff. And for people just to say, here, Mike, I'm just going to give you $50,000 and you deal with all of it. I don't want to know what's going on or don't care to know what's going on.
Beware.
Yeah, it's almost like you're almost as much fault as the guy that's scamming you.
I think, Jim, you and I have
In a
talked
way,
about
you know what I mean?
Yeah,
It's-
kind of.
We've talked about this in the past, and I'm kind of like a skeptical of these things. And my general philosophy is like, if they're making money telling you how to do it versus just doing it, like if it's a money making scheme, but instead of doing that to make
Just
money, I'm
do
going to
it.
instruct you on how to make money doing it. That tells me something. It's like, well, why aren't you just doing the thing that you're telling me to do and just become rich? And Jim says, well, no, because they've transitioned, right? They've been there, done that, and now they want to share it with the world. And
They're angels.
I can see that.
Well,
but
here's the thing. Like, there's a guy, my favorite investor guy, when I used to be a full-time investor, was a guy named Than Merrill. right?
Yeah.
And
You
he
used to
had
hear
this,
his name on this radio station all the time.
yeah, we used
Stan
to hear
Merrill?
it all the
Yeah,
time,
because
right?
he was doing like conventions
everywhere.
yeah, with his book, and
And
Stan
he had
Merrill's
a
huge.
TV
He was really
show.
selling how to do things.
Really
Yeah.
was selling how to do
And
things.
and I've spent a lot of money with him. I've spent tens of thousands of dollars with Dan when I first started in real estate. And he had a show called Flip This House. And the reason why I used Stan, because there were dozens of those
Flipper
investment
shows.
companies,
Yeah,
sure.
not just the
Still
shows,
are.
but people that were selling programs, right? And that's what Stan was selling. Hey, if you want to learn how to become an investor like me and follow my systems, buy this, and you have like a plug-in system to use, right? The reason why I used Stan and I didn't use all the other dozens of companies is because Stan was still in the business doing it as he was teaching it. So he was flipping houses while he was teaching you how to flip
Right. I am
houses.
doing it.
I'm
and
doing
here's
it,
how I'm doing it.
and this is how I'm doing it. And if you paid back then, I think it was $35,000 or $50,000, you went up to Than's Connecticut base. At the time he was in Connecticut. Now I think he's in San Diego. But you could go up there and spend 2 weeks with Dan, and he will set up your whole system, including all the computer systems and everything, and like a plug-it-in system to start your company.
That's crazy.
Including all the advertising you got to do in order to get the deals, right? He had the whole plug-in system. Now, it was totally legit. Dan flipped hundreds of homes, hundreds and hundreds of homes.
Yeah.
Sometimes in 1 year, he'd flip more than 100 homes, and he was doing it all across the country. And his programs are totally legit.
I'm not saying there can't be exceptions, but my general philosophy is something like,
right.
you
But
know,
I feel like now that you're inundated with those things now too. There's more and more.
It's
and
coming
more
out. There are
of
more
like
investments.
a side hustle for people.
So true.
People are thinking right now this is a good time to invest in real estate right now, more so than I've seen over the last 2 years. Of course, during COVID, people were doing that too because of the crazy price appreciation. But the truth is that it's always a good time to invest in real estate if you can get the right deal, right? If you get buy, it doesn't matter if the market's up or down. If you could buy super low and you have the opportunity to do that and the numbers make sense, then it's always a good time.
Yeah,
but,
if you could just make money on an individual flip as an investor, makes sense. If you can make a cash flow for long term, buy and hold,
and that makes
then
sense
it makes
too.
sense. Yeah.
But like in this market right now, what the biggest concern I have for people that want to buy, fix, sell is that it usually takes 4 to 6 months from the time you go into contract to the time you're selling it again. And in 4 to 6 months in this market, we don't really know which way it's going. Is it going to go where the interest rates do drop and the flood of buyers comes back and you get huge appreciation and you end up selling the house for even more than you expected to? Or the interest rates don't go down. We start seeing a little bit more of unemployment, right? Unemployment starts spiking, and then your house loses 5 to 10% value right away. And did you budget that in when you bought the house? So it's a little risky right now unless you can get a grand slam. I call the grand slam properties where it's almost impossible to lose money because you bought it so correctly.
It's like 2 eggs, bacon,
yeah,
and pancakes.
well, the grand slam, right?
Yeah.
So if you buy a grand slam and the market changes negatively, you might end up with a triple instead of the grand slam. You didn't even get the home run; you just got a triple. But a triple's great. That's really healthy profit,
for sure,
right? But if you're buying something and it's a double and the market changes, you might be struck out and don't even get to first base, right? So you have to be really careful. So with these investors, if you're thinking about investing in real estate, learn about real estate, guys. Don't just hand money to somebody because they're making you all these crazy promises. You want to know, let me walk the property that you're telling me you're going to buy or you've bought. And how are you going to make money on this? And actually look at everything. So just be really careful. And especially all those people that are on air like we've been on for 13 years now, right? And they're all telling you all these crazy promises. How many times have we had investors come on our show?
I don't.
0.
I was going to say, I don't know if I ever
Just you,
remember.
Jim.
And the reason why
And Ross.
the reason why is
Right,
you got to really trust. I'm not putting anybody on the air that can take advantage of somebody. Investors can take advantage of vulnerable people very easily. I know I've been sitting in that chair where I could have and didn't. But you have to really trust. I'm not putting anybody on the show I don't trust.
Of course.
So I haven't put anybody on. Now, I have I have a guy named Tom that's a really good investor that I'm going to be showing a property to next week. I trust Tom, but I'm not putting him on the show because he's a good resource for my customers when they need him, right? But I don't want people thinking we're that type of show, right? It would be so easy. You don't know how many times we had investors throw money at this show and say, I want to be a major sponsor on this show. But I just don't want to turn it into an investor show. I want to, I've always wanted this show to be for
the people,
regular people, right? That just want to buy and sell. I just want to buy and sell. And of course, we have that investment component. If you want to invest, we'll help you with that too.
Anything that touches the world of
right?
real estate.
But we're not here just to show you to guarantee, oh, make money in this market, make money in this market. You want to have the conversation, we'll have it off air.
Of course.
Yeah. But anyway, I know
we're not going to hornswoggle you on air.
Yeah,
we're going to hornswoggle you
That's
off
what I
air.
heard.
No.
Bonus points. Bonus points.
It's not that new either. I remember back, like since as an adult, you remember the guy Don Lepre, was that his name?
Don Lepre, little tiny ads in
sell
the
tiny
paper.
ads.
Little tiny ads.
You remember
in
that,
the
Ross?
newspaper.
No.
Did you get that?
He always
No.
was on a yacht in Hawaii.
He
And the
had
bikini
like
girls.
his voice. I could do it. He's like, and I put tiny classified ads in newspapers all over the country, and like he would teach you how to do this, and you're like making money through the classified ad system. And what are you selling? I don't know.
Don't care.
Incense, tchotchkes, like it doesn't matter as long as you could sell it nationally.
I mean, basically,
people would buy it. Right?
He's just internet marketing now with Facebook ads and the same thing.
But his
clicks.
thing was, of course, pay me to show you how to do this. And then how many people paid him, and then how many people actually were successful selling things. It was almost like drop shipping, right? He was the early drop ship, early, ad.
And people are
space
doing that now.
guy.
They're teaching you how to make the money on using Facebook.
I saw one, and I don't know if there's any validity to it or not. It is super scummy, but I think I'm all about it. this guy, he's got his little storefront, and he's got vending machines, and he books like 60 to 100 job interviews, right? And there's no job, there's no opening, but people come in and inherently they're going to buy something out of the vending machines.
Oh,
and he makes like $300 a day out of his vending machine. And again, I don't know the validity of it. I didn't bother looking
I saw
at it.
something about that.
I've seen something like that, but they're hiring actresses for jobs.
I wonder if they have like a camera
There's a couch
outside
in the other room.
and they don't let you in for the interview until you buy something in the machine.
Out there, right?
So you're waiting there 3 hours. It's like, gee, just buy something already.
No,
right?
if you do the math, you're like, man, you're busy. You're doing a lot of interviews. Like you're earning that money, and there's no guarantee they're buying anything. But that's pretty good.
And if there is one legitimate job on offer,
that's the thing is I don't think there's any legit jobs.
Well, it's a vending machine, the guy who supplies it, right? Who
I have one job. You're gonna empty my vending machine every day.
It's funny you mentioned that Don Lepre guy. I just read a little tiny biography about him about
tiny?
a month ago. Yeah, little tiny little it's in the newspaper. It's like that big. But he got busted by the feds and got in big trouble. Then he started another career, got in trouble with that. And I don't think he's alive anymore. I think he's unalived. I think.
Go.
You mentioned Grand Slams earlier, and the mortgage guy over here went to Denny's. And I don't know if everybody else went with us because he's like pancakes.
Yeah.
$199, you're out of your mind. It's in my head forever. There's no way it's $199 anymore. It's probably like $4.99 now.
For
Grand Slam breakfast.
Yeah, I don't know.
I didn't remember $199. You're out of
when
your
I
mind.
was a
That's
kid, when I was a teenager, $199, you're out of your mind. And we would go like 15 through like 18. That was our weekend. Oh, I don't feel so good this morning. We'd all head over to Denny's. I have the most amazing random story. I'll share it with you if you're interested on the other side.
I would love that. When I was a kid, what Denny's was called back then?
$5.99. It's $1.99. What changed?
The cost of eggs went up recently.
It's pancake batter.
Yeah, and bacon.
But I think the pancake batter has eggs in it.
What's the current price on pork bellies?
I got to ask Eddie Murphy.
Right.
I'm sure.
Oh, I watched
sure.
Coming to America the other night, and I tuned in right at the time he was walking by, and he slipped Mortimer the money.
Yes.
Yeah,
Nice.
We're back.
We're back.
Oh, right.
We're back.
That perfect little Easter egg. So good.
So let's take a break. On the flip side, we're going to talk about.
I'll share it if you're interested.
I know. I want
It's
to
a
hear
random.
it. And then right after that,
Denny
we're
story.
going to talk a little bit. I mentioned this to Ross before. This is, I think, good news for the insurance industry. More good news.
Awesome.
The state of Florida took back $2.1 billion from a hurricane fund because they said they don't need it. So I think that's kind of interesting. So we're going to talk about that.
Okay. And lots more to get into. As you can see, if you're looking at the clock, we have plenty of time remaining on this Saturday. We'll take you up until 11 like we do every weekend. And you're always welcome. Toll free, 877-927-6969. Questions, comments, concerns in the world of real estate. You got a Denny story? Bring it on a Saturday. Of course, we are live on the 26th of July. Thanks for being there. If you're not comfortable on the radio, believe me, I understand. You can always go to floridatalkrealestate.com, your one-stop real estate shop. Pros, y'all. Experts in their field. You get them all at one place. The one-stop real estate shop. It's floridatalkrealestate.com. Know it, use it, love it, share it. You can change lives, including your very own, with the pros at floridatalkrealestate.com. We're back in 4 minutes. Thanks for being with us. Florida Talk Real Estate right here. It's Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1. Here's what's happening with the weather on Real Radio.
I'm meteorologist Jennifer Collins with CBS 12 News. A hazy, hot, and humid afternoon is in store with temperatures in the low to mid-90s and heat index values in the triple digits. Expect a low rain chance through the second half of the day. Temperatures tonight will remain in the 70s by the start of Sunday morning under a mostly clear sky.
This report is sponsored by Lowe's. Pro Savings Days are back at Lowe's. Right now, get a 4-piece GE kitchen suite for under $2,000. Shop big deals in store or online today. Valid through 8/1. Selection varies by location while supplies last. Discount taken at time of purchase. See sales associate for details.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
All right, back at it on a Saturday. Thanks for being with us. Of course, that's your toll-free number, 877-927-6969. If you'd like to join the conversation at hand, you're more than welcome. If you have a question, comment, concern for the pros, bring it. Timothy will line you up there. He's our producer extraordinaire. At least I think I can speak for you.
Mm-hmm. Yes, absolutely.
Good. Nice to see you as always.
Good to see you as well. Yeah.
Johnny C, that's me. Your old buddy, your old pal. You like the little, jeez, sound like Dr. Rich. I'm kidding. That's a dated reference, by the way.
Doctor Who?
Yeah. Only one of the names that built this radio station over the years. And if you don't know, you should know. You better know your history. Thank you to the Love Doctors and the fan base for building the Real Radio legacy.
I don't hear you say Dr. Glenn too often.
Well, I mean, it's the Love Doctors.
Both of them.
Yeah. We get them all. Rest in peace, Tanner Sayer. Dano gets a bunch of love. Of course. Yeah. There's a lot of names that are involved with the legacy of this station, including Jimothy and yours truly over here. By the way, this show's been on here for 13 plus years. So
got some legs.
Part of the history. Yes. There's Mike Rauch. He's the mortgage guy from the mortgage firm. Hello, my friend.
Hi. Sorry to step on your intro there.
No.
Guten Morgen.
Is that a good morning?
In German.
In German.
I remember that.
You took German?
I took a couple, 2 years of German in high school.
Makes more sense than my decision. I took Latin.
Yeah.
Yeah, I flunked it twice because I'm an idiot. Yeah.
Flunked it the first time. You're like, no.
I'm not flunking it. I'm not flunking it.
They offered Latin in my school, and there was a certain group of students who took it seriously.
The dumb ones, yeah.
No, they were the smart ones.
Yeah,
they were like
So I found the same thing. I found it to be the smartest kids in the school and me.
Yeah.
And I'm like, wow.
They're like all in the spelling bee, and you're like,
right.
Yep. You're in the tasting bee.
And I'm sitting there, I hear wah, 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 wah. And I'm sitting next to, check this out real quick. Whole wall of books, stacked books, right? They didn't build a bookshelf. They kind of built like a cutout in the wall to stack books.
Oh, stacked.
And they're all paperbacks, right? I'm like, is that the right word? Paperbacks.
Yeah, paperback.
Almost felt racist in a way of saying it. They're all paperbacks.
Interesting.
I don't know. It felt weird. I felt like I needed to correct myself.
All right.
And I'm sitting there and I hear wah, 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 wah. And I want to pull the one out on the bottom over here.
Like Jenga.
So I go for it, and the whole wall. The whole wall. I'm talking like 10 feet of books. The whole wall, floor to ceiling, topple over.
Nice.
And I got the one book in my hands, and my teacher looks at me and she's like, "Who did that?" And I'm like,
"Not me."
Strangest thing ever.
Oh my god, that's funny. That's funny.
Ridiculous. Ross Komarinetz, he's with Brightway Insurance, Juno Beach. Hello, Ross.
Hello.
That teacher hated my guts, by the way. And when I took the class again, she was like, "You got to be kidding me." She was a nun.
She was going to fail you no matter what the second time.
Jim, when I graduated, I ended up at a party, right? At a girl's house that I just started dating, right? She went to the Crosstown Rival. As I'm walking down her hallway, I'm like, "Why is Mrs. Lamb's picture in your house?" She's like, "That's my mom." I was like, "Oh, this is going to be amazing." Your
Wait,
mom hates my guts.
You said she was a nun.
She was. She grew up a nun and then overcame the nunness, I guess, and then had a family.
Right?
Yeah.
But she still called herself a nun.
Had a family. Yeah.
Nice.
Okay.
Got over it like a cold.
Yeah. You know. And then hated me. And then I became like, I dated her daughter for years.
I like how you included that as part of her life story. She was a nun. She overcame it. She had a family. She hated me.
Hated me.
Right.
Yeah.
That's
Those that's
her life.
Those are her landmarks. Those are. I'm like, why is she on your wall? Well, that's my mom. I was like, oh, this is gonna be amazing.
Did you like win her over?
Never.
Oh, never.
Mm-mm.
You can't be a nun and hate people. Maybe that was why she left the nunnery.
Mike, you're obviously not Catholic.
She didn't have it in her.
Oh, that's true. I'm not.
He's definitely not Catholic.
Yeah, I was. They tried to force that in me. They tried to shoehorn me in when I was little. I was like, no. There's Jimmy D. He's Jim DePola. Told you 13 plus years now. He runs a top producing Keller Williams team. It's a Florida Home Pros team. Keller Williams Innovations. Hello, Jimmy D.
Hey, we do. I want to hear your your restaurant story, but not right this second.
Totally
we'll do it
understand.
on the next one. Okay.
Yeah, we got to separate from the nunness.
Yeah, the nunness. Okay. So I wanted to talk just about this insurance thing because I talked to Ross about this last week. He was like, I don't know what you're talking about, and I couldn't find it. So I wanted to find out, Ross, if you have any opinion on this, which you might not have at all. So
you can form one.
Apparently, remember when we were having problem where the reinsurance industry was going to not back Florida insurance companies? Now, that's a really big deal because all insurance companies have a backer called a reinsurance plan. So the insurance companies have an insurance plan, and really the reinsurance industry is what controls everything.
Those are global international companies with deep pockets.
Really deep pockets, right? So they were so concerned about what was happening in Florida with all the fraud and the amount of costs that were happening because of claims, legal claims, not actual damages from properties, but the legal stuff, that they were thinking about pulling out of Florida and saying, we're not going to insure in Florida. And the companies couldn't operate without that. And this was all happening around 2021, 2022, when the rates were starting to go up really high. And if reinsurance disappeared, the whole thing probably would have collapsed. So what the state legislature did back then is they set up some programs that would take taxpayer dollars and use it as a reinsurance plan, like a backup plan for the insurance companies to say, hey, don't worry, if you can't get reinsurance, the taxpayers will back you.
We got your back.
Which we, at the time, we were like, I thought that was kind of scary. So now it's been a couple of years, and here's what's happened. They set aside $3 billion, Ross, for these programs. But bless you. But one of the things I didn't understand is that they were only good for 2 hurricanes. It wasn't like for any hurricane that came in the future. These were for past hurricanes that happened, and they were putting money aside in case the insurance companies needed, and they didn't have enough money. So they put aside $3 billion.
Wait, I don't think it was for past.
Yeah. Let me show you here. It says during a special session in June 22 and amid widespread financial problems, lawmakers created what was known as a Reinsurance to Assist Policyholders, or RAP program, which is a state general revenue, provided $2 billion for reinsurance that the insurers could tap at no cost after they paid a certain amount of losses. They said that Hurricane Ian, which made landfall in September 2022, accounts for almost all the money projected to be used in the program. As of the end of 2024, the insurers received $740 million from that program for Ian losses.
Right. So the program went into effect before Ian.
When did Ian hit? Did Ian?
You just said 2022.
I think you said June and then September Ian hit.
Yeah, but yeah, you're right. Oh, it was very close because they passed the law in June and then September they needed it. Mm-hmm. Yeah, bless you.
It's almost as if they knew there was going to be a hurricane.
Well, there were only 2 hurricanes that they're talking about. They're talking about Ian and Helene.
Right. So I think the summary was they didn't even use it.
didn't need to use.
They
all
used 740 million of it, so they used almost $1 billion of it. But that's why they're taking the 2.1 billion back. They put 3 million in, and they're taking two. They put 3 billion in, and they're taking 2 billion back.
And then
because they're saying they didn't need the money.
And then the carriers that took part in that program also canceled their contracts and said, we don't need it. And so so the state's basically like, okay, we have this money that nobody's going to use. The people that were using it aren't using it.
Right. So that's a good thing that we didn't spend it. That's they budgeted 3 billion, but we only spent about $1 billion of it.
Well,
so
and then
they're getting 2 billion back.
So why not keep it for?
Well, that was the question I was wondering. That's what I wanted to talk about right now.
Just in case,
do you think
Vegas, baby?
Maybe it's because reinsurance is back and there isn't a threat to reinsurance.
Yeah, that's what it was.
Out?
It was difficult to get reinsurance. Reinsurance was during that time was becoming very expensive, and so the carriers were having difficulty shoring that up. So the state said, "Okay, if you can't get it, we'll come in and we'll be your reinsurance." There were a couple of stipulations that you had to meet in order to qualify for that program, and then the carriers didn't need it.
Am I not following along though? So I thought, and maybe I'm not. Didn't the way Jim lay it out, didn't he say it was Ian and the companies were 740 million short on?
They had to tap into.
But they had to tap into it.
But that's not reinsurance, right?
But that was
that's the claims that they're drowning in, right?
So the way reinsurance works is it's an insurance for the insurance company. So just like you, if you have a claim, you're responsible. You're like, once you hit, your whatever your deductible is, you're out of pocket to pay for your damage, then you have insurance to pay for the rest of the damage.
Sure. Okay.
So in a larger picture,
the insurance companies have this same kind of situation.
Correct.
Okay.
And so the reinsurance is their insurance carrier.
Okay, so that 740 million was a shortfall between what their reinsurance would pay them back and the actual number?
Yes.
Or it was maybe they didn't get traditional reinsurance.
I was going to say, because it sounds like they don't carry enough insurance.
Well, no. So what I'm saying is maybe they didn't just carry, like maybe they just didn't go get reinsurance from XYZ conglomerate. And they only participated in the Florida reinsurance. So either way, they would have gotten $741 million. It's just that they didn't get it from a private company. They got it from a public company.
Of coverage, you mean?
Of claims of dollars paid out.
Oh, so then what was the last thing you said, though, that they ended up not needing the money that they claimed?
So the companies that were participating in the program didn't renew their contract to participate in the program. So really, they have this money, but nobody's.
So 700 was paid out.
Some signed up to borrow to use it.
300 billion.
No, just 3 billion.
3 billion. 700 million of which was actually paid out.
So think of it
2.3.
So think of it as like you could either go get Citizens homeowners insurance, which is whatever you want to call it, backed by the state.
It's the best in the state, right? What I heard.
So you can either go get Citizens from a public or Citizens from whatever, or you can get a private carrier to insure your house.
Right.
Right. And if nobody's using Citizens, nobody's signing up to use Citizens, eventually Citizens would cease to exist if they haven't written a policy in 2 years. And nobody wants to.
Yeah.
Right. So it's kind of the same thing. We have this program, but nobody's using it. So we're going to take that money.
Repurpose the funds.
Right. Exactly.
And then Johnny's like, but what happens when we need it again? Then you got to go through this whole motion of getting it set up and funding it and all that.
But then we're going to be back into a reinsurance crisis. And if that happens, at least now we have a blueprint and we can go, okay, hey, we've experienced this before. We just need to allocate this money, see who takes advantage of it.
And Johnny's saying, but now you're going to spend the money that you already allocated. Like, where's it going to go? That's why I said we're going to Vegas.
Well, if we were, again, when it comes to spending taxpayer dollars, it's one thing. But when it is voted on and allocated a certain way, that's the way it's supposed to be appropriated. It shouldn't be used for anything else. And I don't care if it's on a state or federal level. It's not about politics.
Yeah.
It's about that's what it was approved for. That's what we use it for.
It's
not we're not going to use it.
There's
for that
an old
anymore.
cycle, Johnny. You basically you give it back to the taxpayer, and then the next crisis you grab it again from
Yeah, I mean, I
from
don't
the
know
taxpayer.
what they're,
Yeah, exactly.
Yeah.
you know, I don't know what they're doing with that money if they're going to go feed homeless puppies, but
No, they'll redirect it towards something else, or just
maybe they'll build a golf course on JD.
I was just going to say that. That's
That's
exactly what I was
you
going
know?
to say. Now they got the money for the golf course.
That'd be awesome.
Yeah, now they got the money for the golf
they
course.
need some funds for
all kinds of centers,
Disney lawsuits and stuff like that.
Yeah. Well, and maybe sit on it too, because we're into hurricane season, and it's going to start. What does they say? It starts peaking in August, right?
I mean, the prudent thing to do would be like you would do with any of your household budget stuff, which is like set it aside just in case, right? Emergency funds, nest egg, savings, whatever it is.
Well,
but
I think like you have to like that. Like I don't know what you do with that money, but if it's already been kind of earmarked towards being a reinsurance fund that nobody's
using,
you have to sign up and have a contract to use it. It's not something that like, oh man, hey, we ran out of money. Can we use that now?
Right.
It's something that it's like insurance. So you can't be like, oh, hey, Ross, my house burnt down yesterday. Can I get some of that insurance that you were selling?
Grab it back. Yeah.
Yeah.
I'll take the highest quote you had too. That's fine.
Yeah.
All right. So that was good. I had another question come up to me yesterday about insurance. They were talking about, maybe Ross has some insight on this. Like in the condo market, this was more Central Florida, but I think it applies. Have the condos caught up as far as like the insurance spike that we were seeing?
Dude, one of my carriers just opened back up that was super competitive in condos, and they are so cheap right now.
Oh,
nice.
So cheap.
So this is like condo individual insurance. I'm thinking more like the master policies, like, master policies for condos was one of the reasons that HOA or condo fees were going up, right? They had to do the 40-year inspections. They had to do some of the structural integrity stuff.
The reserve
insurance was getting more costly for them. They had to catch up on reserves. All of that kind of hit at the same time, causing condo dues to go from, $500 a month to $1,000 a month or whatever it was. Has all of that now settled down? And maybe on the insurance front, has that settled down where like now they're seeing some of the same easing of insurance increases, maybe even slight decreases from their peaks?
I don't deal with any of the master policy stuff.
Yeah.
So, I mean, I don't know. It seems if anybody's in an HOA, how are your HOA fees? Are they staying pretty...
Right.
Are they stable now?
Right. So they took the hit and now they've stabilized.
Right.
And it's like, what's it going to look like in the next 5 years or something?
I would think similar.
Yeah. I don't
holding, right?
I don't think it's going to get worse. I think things are definitely getting better, at least as far as what I'm seeing in the personal lines market. Things are definitely getting a lot better.
And the condo market, the same, I'm talking about for sales, not insurance. The condo market, it's still pretty rocky road for a lot of communities out there, but there is a silver lining coming up, or a light at the end of the tunnel that isn't a train coming at you. Is that once everybody starts complying with these regulations for the first time, and I don't know how long, Mike, maybe I guess before you and I were in this business, before the crash, regular people, first-time home buyers can use FHA low down payment financing to get into condos. And that's going to be a big deal. That's going to be a very big deal for buyers.
Sure is.
There's so many first-time home buyers that come to me and they're on a really, really tight budget and they're showing me condos for $150, $200, right? Because that's really all they could afford. They're like, wow, I could afford a mortgage payment.
Right, but you have 20% down.
Right, and not even 20%, Mike. What do you say normally to tell people when they're buying a condo to budget for?
So traditionally, if you wanted to avoid having to ask all of the questions and look deeply into the condo's like financial situation, it's 25% down.
Right. So $100,000, you're putting $25,000 down on a $100,000 apartment, right?
Yeah.
But if you were to do FHA financing, it'd only be $3,500 down.
Huge difference.
So it's going to be huge. So once that opens up, and once the buyers, like sharp agents like me, ding, 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 are going to take advantage of that for our buyers. And at the beginning, a lot of people are going to be clueless about it, and you can go in there and snap them up.
Yeah.
And it's going to raise the prices of condos. So even though we had these tremendous depreciation in the condo market for a long time, that's going to change. It's going to start coming back up because these are going to be the affordable homes people.
And like when it comes to condo financing, the question was always, how like not only do you have to qualify as a borrower, but also the condo association itself had to qualify and the building had to qualify. And so there were certain like minimum requirements, things that, you know, they set the rules like, hey, this is a financially healthy condo association versus one that is mismanaged, maybe not so, you know, kind of like, they're just hoping for the best, right? Crossing their fingers and hoping nothing goes wrong. And so as these condo associations have kind of been forced to fall in line and to budget properly and to have the proper amount of insurance and all of that stuff, it becomes where they're now going to be eligible for low down payment conventional, eligible maybe for VA financing, eligible for FHA financing. And so the more and more we see of that, it's just an indicator that the risk on the condo itself is less and less, meaning they're financially healthy and the buildings are in good shape. And so they're essentially not a risk of high foreclosure or default rates or losses, essentially. So, yeah, I think and so then the conversation I was having, Jim, was like, the condo market right now feels soft from if you're a seller, like you're trying to sell your condo, it's been a rough road. Is it a good time to be a condo buyer? And do I need to be worried about out of control condo dues in the future? Because that's always a risk. Like in any association, condos especially, like can these things get out of control and really price me out of my budget? And that's happened for a lot of people over the last years, which is part of why the market is soft. I don't know if we've hit a point where it's like, okay, now you should be buying condos. Like you can go get these condos really cheap.
No,
I don't know if we're there yet. But
but
if you're a condo buyer, probably not a terrible time.
Yeah, right. You're going to get super low prices, but you also have to make sure that the community, my advice is make sure the community is doing what they're supposed to get everything corrected.
Yes.
So you're buying at their weakest moment.
And if you want a waterfront condo, are there opportunities out there?
Yeah, there are definitely opportunities out there, but you have to make sure that the condo's dealing with the issues in a timely manner and that you can see a path that in the next year, 18 months, it's all going to be settled up and they're going to be fine, right? You don't want to be one in right now, like you don't want to be buying into a condo where the community's at odds with the board and they're upset about the money that's going to be spent. Everybody's fighting and trying to get wiggle out of the problem. You don't want to be in that. But if the people is like, yeah, we already hired our concrete restoration people and we've already done the study and we know how much money we need to spend and we're already working on fixing all that.
And there's condos out there like that was never us. Like we stayed on top of things all the time.
Yeah,
so we haven't seen huge increases. Our increases were because, insurance got more expensive, not because we had to, completely redo our foundations.
Right. We didn't have any money in the coffers, right?
Right.
Well, let's switch over a little bit because I did want to get into what's happening with.
Can I just ask a quick question?
Sure.
It sounds to me like a daunting task to make sure that these condo associations are lined up appropriately. But if you're doing financing, like the lender's going to be looking into that. If you have a good realtor, they're going to be really looking over all the docs from the condo associations. So this isn't like, yeah, you have some responsibility in this, but this isn't as daunting of a task and a burden as a buyer. It doesn't fall all in your lap, right? There's a lot of help you're going to get.
You should be able to get assistance. Yeah, you should have assistance. Your team should be able to help. Because you don't know
what you're looking at. I don't know what I'm looking at. You know what I mean?
Yeah, I would say because our general philosophy throughout our entire time doing this is to actually be able to close on a contract that you're in. We have kind of naturally explored how to do condo financing in the right way, meaning we're asking all the right questions up front. We know I know exactly what to look for to say, yeah, you can do this FHA, you can do a VA, you can do a conventional low down payment, or you're going to have to do a big down payment. Like we have been doing that for so many years, Johnny. Like it's just natural that we're looking at that from a lending approval perspective. And that just happens to coincide with, like, if they can pass our review, they're probably okay, right? And if they can't pass our review, doesn't mean you can't do it, but you need to be thinking about it.
Here's why.
Yeah. And so we just have always done it. And so,
I have to caveat here because there's no guarantee, because what I'm thinking about right now is I had a buyer who was on a very tight budget, a senior, and we put them into a condo and we did all this vetting, and the condo was only 2 stories tall. So they didn't have to have the same kind of regulations that a 3-story or higher condo had and things like that.
As far as the state regulations,
And they've been there barely a year now, and they already have a $5,000 assessment, and that's a huge amount of money to this person, and I feel really bad about that. But there's just nothing you can do. It's just like no matter how much you vet, there's still a risk that there's something going to pop up, and that's the scary. That's the scary part right now with the condos. So it's going to take time for all that to get cleared up.
So even if
we're on our way to do that.
But even if you do look at, the docs and you're like, everything looks good, it looks like, they're doing everything responsibly, some major thing can pop up that isn't, in your plan currently. Again, a plan that can't change is a bad plan, unfortunately. Yeah. But they're going to have to deal with that. And that contingency comes into play. And sometimes it does mean an assessment that's going to cost you, hundreds of dollars. And that's a sad reality. But you can't predict that kind of stuff.
Yeah, for sure. So
you want to take a phone call?
Yeah, I was going to say, can we take the phone call?
Sure. Yeah. Well, part of owning a home is, pest control. So we got our buddy Greg Rice on the line with us today.
Oh,
hey, Greg, how you doing, little buddy?
Wow.
Hey guys, how's it going?
Oh, hey, Greg.
Good.
Welcome.
Yeah, Johnny.
Yeah, buddy.
Yeah, do you know why real estate agents put their pictures on billboards inside of buses?
Why did they do that?
Yes, you know what they look like 10 years ago.
That is kind of funny.
Thank you, Greg. I hope you're doing well, bud.
Thanks, man.
Appreciate you being out there. Have an awesome weekend.
10 years?
The world famous Greg Rice.
That's so true.
I was going to say more like 20 years.
Yeah, I was gonna say, we have some people we're thinking about already, right? So
yeah, that needs to be updated, huh?
Wanted to talk a little bit about interest rates and then slide into what's happening in the real estate market down here locally.
All right. Let me just quickly let everyone know you can dial in 877-927-6969 like Greg Rice just did. Mm-hmm. Questions, comments, concerns in the world of real estate, you're welcome. Of course, if you're not comfortable on the radio, Greg is very comfortable on the radio. If you're not, remember FloridaTalkRealEstate.com. You need pros, experts in their field. When you're buying a home, selling a home, you're stuck with a home, you don't know what to do. Anything that touches the world of real estate, we got a professional for you at FloridaTalkRealEstate.com. Facebook, YouTube, know it, use it, love it, share it. It's FloridaTalkRealEstate.com.
Thank you, Johnny. So the reason why we haven't talked about real estate mortgage rates lately is because me and Mike haven't been in the room together a lot. And also because there really hasn't been any real major news about it. But just to give you an idea, from April into today we're at 6.74%. Last week we're at 6.75%. So we went up we dropped 0.01. But from April, our high was 683 and our low was 667. And we're at 674 right now. So basically we've been flat since April. And so the interest rates really have just been kind of, actually, it's been kind of nice, to be honest with you. What I really hated was last time when we were like September of last year, that was horrible. Because like September, just to give you an idea, we were at like 6.08, which was like the low for the last 12 months. And within 1 week, 2 week, 3 week, and then we had 5-week increases. We had 5 increases in a row. And we got up to 6.8 from 6.0 basically. And we went up 3/4 of a point in like 5 weeks. That was a terrible time to be a buyer's agent and a buyer because the mortgage rate kept changing day by day by day, and it kept going up and up and up.
Yeah, to be anyone stretching their limits.
Right. So if you took 5 weeks to find your home and you were okay at 6.08, and the interest rate went up to 6.8, right? You just lost like 6%, 7% of your purchase power, all other things being equal. So it was always very scary. Should we lock in the rate? Remember we were talking about that all the time, Mike? Should we lock in, not lock in, blah, 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 blah. Well, now we haven't had any of those problems as a buyer. And I was talking to a buyer that we're going to be working with Peter soon, and we're going to get him on the air because he owns a really good company that our customers have been using. But I had a conversation with him a couple of days ago, and he mentioned to me that I called him up because I told him, Peter, I know you don't necessarily need to buy right now, but if you want to be part of the buyer's market and not be in a seller's market, you really should start looking right now, because I think we're towards the end of the buyer's market, this cycle of this buyer's market. And I said the reason why is, what if the interest rates do start dropping, we're going to get a flood of buyers coming in. And now you're going to be competing with all those buyers. Right now, it's crickets chirping for most properties, and you're going to be the only game in town most of the time. And you're going to be able to negotiate mano a mano with the seller and try to get the best deal possible. But if you wait for the interest rates to go down, you're going to be competing with everybody else and following the buffalo herd. And I really believe that to be true. And there was an article that came out, Mike, about interest rates, about what's the secret number for interest rates. And this is the second survey. We talked about this last week, Johnny.
Right.
And so the secret number, do you remember about 2 years ago, maybe even 3 years ago, maybe even a little longer, that the secret number was
5.
Anything with below a 5. Remember, it had
Okay.
to be below 5, right? If you had to have a 4.99 in there in order for people to come back to the market because the interest rates were too high. Then we got to the point where you had to have a 5, right? 5, something with the 5 in it was going to get everybody back. Now the secret number, according to the last survey, was 6, right?
Okay.
Just 6.0.
Mm-hmm.
And this new survey came out, and that's the same number, 6.0. That's what the buyers are saying, or potential buyers, would-be buyers are saying. That's what they want to see the interest rates get to.
Do you remember what the rates were when they were saying it's a 5? Was it something like 5.75?
Yeah, and that's so true, right?
Right?
That's what I was going to say. It isn't really that much, and
Just a little bit lower than it is right now.
You know what it tells me? Because it doesn't matter what the number is. These are all people that aren't going to be buyers. They're not. And they just have some arbitrary number. They're like, that makes me feel better. I would do that if it would do that.
It gives them justification for not buying.
Exactly.
Oh, I'm not at the interest rate. Like, they're sophisticated about interest rates,
Exactly.
right? Oh, I can't.
I would
if I'm not going to get that interest rate, I'm not buying.
I would say this. It doesn't mean there isn't a secret number, but the secret number isn't the interest rate. The secret number is your monthly payment.
Yeah, your
and I'll tell
mortgage
you what,
payment.
like, to the point of, like, rates have been generally steady this year.
Mhm.
If you have been kind of like a pseudo active buyer, like take Johnny, for example, where he's connected in the app or some mechanism of analyzing numbers, and he's got an idea of the type of home he needs to live in, the neighborhoods that he's targeting. And if he's been kind of diligently watching, he probably has seen something like, and he's got a target in his mind of, like, I need the stars to align so I end up at this payment. He's been seeing it inch closer and closer to the target, not because rates have come down, but because prices have softened, right? Like the market on prices has softened, and things are, even if they have held like their initial list price, they go to 45 days, 60 days on, and you can start to think, well, okay, wait a second. What if I get this house at this number? And so if you've kind of been sitting back actively watching that, and you're really just looking for the payment to land at a place, it's been inching down, not because of rates, but because of softening in the price, in the price of homes.
It's absolutely
and the ability
true.
to get cash out of sellers and the negotiating power.
And here's the thing, but buyers have to understand.
Facts.
Yeah.
If the interest rates did get to 6% flat, which we're not that far off of, we're basically 3/4 of a point from there.
We were there in September.
Right. Yeah, exactly.
It's like
right.
yesterday.
So if we get to 6.0, the magic number, they feel that an extra 550,000 buyers will come into the market nationwide. That's a pretty big deal. That's about 10% of all the buyers across the country for the whole year.
It's a big pop.
We're selling
So there's
just
5 million active kind of buyers out there. Is that
well,
my
no,
math right
there's
on that?
usually right now between 5 million and 6 million sales a year.
Okay.
So if
all
you
right.
had 550,000 new people, it's about
10%.
10%,
Sure.
right? So, and really we're closer to 5 million than we are 6. 6 million was the peak of all time in 1 year, was 6 million sales, right? We've always been in the fives, low fives, right? So, so anyway, if you're waiting for these interest rates and that's your thing in your mind, once again, we're just trying to prove to you that you're going to be dealing with all these other people and you're not going to get the same deal. The sellers are not going to work with you the same way. You're not going to get the same discounts. It just is a fact.
Well, and if you have that number in your head based on what the effects are to your monthly obligation, then that's totally justifiable. But if you don't know how that incorporates with your taxes and your insurance and what your monthly obligation is based on your criteria, then you're really
Just tire kicking a little bit. Right?
Well, I mean, maybe. Yeah, I don't even
You're just eyeballing the air level.
I think you're just talking to hear yourself talk.
Yeah.
Like,
Sure.
Truthfully.
And that's okay. I mean, what do we do every week? Like we're in the business, but we talk about real estate. So that's okay.
Yeah.
As long as you can,
But
recognize that.
There's reason for the words that are spoken more times than unless it's me speaking.
If that's you, Johnny, and you you go to cocktail parties and you're giving advice about, you got to wait, these rates are too high or whatever, then you're kind of doing a little bit of injustice, right? There's an injustice to those potential people because it really shouldn't be it's not the correct metric to be targeted.
That's right. Of course, it is part of.
Sure.
Yeah. Part of it. Yeah.
I wonder, Jim, are sellers waiting for rates to come down for the same reason? Like, because they're like, listen, I'm not going to be in this. I'm not going to put my bait out there and just have it like chummed up or whatever, chewed up by every single buyer comes by taking little nips. I'm going to wait for these rates to come down. I'm going to wait for buyers to come out. And then I'm going to have
most of the people
eyeballs
that I'm dealing with that are on the market right now need to sell now.
But they're on the market, they're selling.
There used to be for a long time, people would put their house on the market. If they get the price that they want, they would sell.
Sure.
Right.
All right.
But a lot of those people have gone away. That's what we were talking about with the decrease of inventory over time. We've seen the inventory shrinking.
Your speculative sellers are not.
Because they're out there like, if I don't get the number I want, I don't think it's worth it. I'm going to wait. And those people that are doing that, they're betting that we're going to see this new influx of buyers, the stream of buyers coming in. And the most common thing I'm hearing right now, and I'm like rolling my eyes when I hear it because, why don't you just believe in, fairies and rainbows and unicorns too?
It's okay to
but
believe
it's the whole thing. It's the whole thing about that mayor race, memorial race in New York, and that everybody's going to be fleeing. Everybody's going to be fleeing.
If the one guy wins, Florida's going to have a boom of new buyers.
There's a lot of people out there right now that believe it's already happening just because he won the primary. I'm like, the guy isn't even the mayor yet. You're already saying that all these people are going to flee because of him and that they're going to flee now. And I'm like, we're not seeing that yet, but it isn't like that isn't a light switch thing. You're not just going to see like everybody like packing their U-Hauls and driving to Florida in one day.
As a prudent real estate agent, though, you should probably be prepared for that influx. You should be like marketing. There will be some. But whether or not it's going to be like a COVID moment,
that's what these people are thinking. I have a customer who said that they might want to take a house off the market that's been on the market quite a while, and they've lost a lot of money on this house, right? Because they're investors. But they're thinking if they take it off the market and they hold, 3 months, 6 months, that the prices are going to rise because of this New York influx.
Huh.
And I'm like, but rise enough to recoup all the losses from holding on to the property for another long period of time. Because there's carry costs involved
just
too.
Accruing carry.
And they go, the carry costs, you're really thinking the appreciation is going to jump over the carry costs that quickly? I don't think so. It's better to rip the Band-Aid off and just get the thing done and then take the money that you have left over and reinvest it in a better deal.
That's right. When you got on the wrong train, you should get off at the next stop.
Yeah, now
if you wait, it's more expensive to come back.
Exactly. It's so true.
It's just it's common sense.
So let's talk about the monthly stats, and I'm going to focus on Palm Beach County first, so I'm going to give it away. Palm Beach County, out of the 5 counties, had the weakest stats. I thought that was kind of interesting. And I'm comparing it to St. Lucie, Martin, Palm Beach County, Broward County, Dade County, right? So
I was prepared for you to say another county, and now I've got my hackles up. I'm ready to defend Palm Beach County.
Okay,
see what's going on here.
So
we're just talking volume, though.
The other thing is,
hackles.
No, a bunch of different things. So is that
right?
That's another one of my term thing is all
Yeah.
everybody's using all my terms.
Is that a saying?
Hackles up. Yeah, you get your hackles up.
I'm glad
So
Jimmy-
get your hackles up.
I'm glad Timothy brought it up because I was like,
You never heard of that?
You knew what I meant.
Wow, that's
You knew what I meant.
In context, I kind of felt like I got
Get
there.
my blood boiling.
Like
I'm
you're ready to
like,
you're ready to fight.
or
Yeah.
flight, depending on the
I've heard of
stats.
that term. So I've been reading with all these YouTube real estate people and investor people, because I watch a lot of that, just to see what other people are saying, how they're spinning the stats and everything. And I hear all the time about how we're ground zero again, and we're starting the whole big crash over again, and blah 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 blah.
Huh.
And I'm sorry, guys, it's just not showing up in the stats. That's what people are worried about. And I'm not saying that it isn't going to happen, but there's nothing really here to say it's happening now.
Well, who's worried about it though?
Well, when you say worried about it, it's all of, when I'm saying it, it's the people that are interpreting the stats and saying that the market's crashing. You see it all the time, right?
Yeah,
you
and
see
it's
all this market
it's
crash
such
stuff,
clickbaity
and
nonsense.
it's all clickbaity stuff. And so let's look at Palm Beach County. So I'm going to go over like the most important metrics, which is closed sales and median sales price and time to contract and list price to sales price and inventory. Those are the most important things to determine the market. So closed sales for June 2025 for single family homes, Palm Beach County, 1,187. Last year, this time we were at 1,269. Now that's a 6.5% decrease, but we're talking about, 70 homes out of 1,200, right? So it's 6.5% decrease. It's true, but it isn't like we're seeing tremendously bad numbers. Now, is 1,187 sales in a month, is that high or low? Well, for the last year, it's
What month is this?
June.
June.
This is last month. Yeah, because we always get the reports a month behind, right? Because we got to wait for the reports to come out. So this month we're at 1,187. We've only had 3 other months in the last, actually 4 other months in the last 12 that had higher than 1,187. And the highest was 1,328.
But you told us earlier that we do like low 5 million transaction nationally a year. If we're doing like 1,200 a month in Palm Beach County, we're totally doing our part for that 5 million a year.
Yeah, for sure. And that
There's a lot
isn't
of
like the
counties.
worst. Now,
What's that?
So there's a lot of counties in the nation.
It's a lot of
that
counties.
don't do anything.
We're
nearly close to that.
absolutely doing our part to get us to that
Yeah.
number.
oh
Like,
yeah,
I just-
without a doubt.
I feel like-
we're the wealthiest per capita county in the country, if I'm not mistaken, or in the top 10.
That's what I feel like.
But I just feel like we're I feel like as we shift into more of like almost a buyer's market, that's when the naysayers really kick in more and more. They're like, oh, things are so bad.
Well, what would be bad? What would be bad closed sales? Let's pick a couple months. January was horrible. January made me go, wow, when I saw the report
Was
come
that
up.
600 something?
It was 850, and that's really, really low. And then we had November of last year, and that's when interest rates hit 7.79. We only had 841 sales. So we had 3 months out of the last 12 that weren't at least 4 digits, at least 1,000 sales or more. We only had 3 out of 12. That isn't showing in the last 5 months, February till now, 1,009, 1,255, 1,328, 1,334, 1,187. All
Okay.
pretty healthy months overall. So I don't
With
see,
a nice.
so
like,
where's the crash?
Well, with a nice steady interest rate. If we go back to like just rates, just on that point in January. So if you're closing a deal in January, financed, that means you got into contract in December,
November,
maybe November,
Yeah.
right? So for September was the low 6.08.
But November,
to mid-January was 7. It went up basically a full interest, one full point going from September to January.
Throw the brakes on it.
And so if you were in November and December and you saw rates, well, geez, these rates are going up. When are they going to stop? It could have just put a pause on you.
and that's
like
exactly
you could
what
have just
happened.
backed out of the market.
Yep,
So,
that's what would have
for a
happened.
couple months, and then
So-
they
Yeah.
level off a little bit, and all right, we're back in it.
So median sales price for Palm Beach County, the highest we ever hit was 6599, right? 659,900. This month we're at, which
Can I guess?
actually,
Can I guess?
Yep.
641.
626.
I
Okay.
almost went lower.
So,
you were over.
and I
almost
was
went lower.
wrong. actually the highest of all time was a year ago in June, and it was 659,999. Right. So we almost hit 660.
You tricked Johnny.
Right. So we're at 626. So where are we at? It's like where does 626 land? Well, in the last 12 months, the lowest was 615, and the highest was 659,999.
We are crushing it.
So 626, we're kind of like, it isn't that much of a variance, but if you're going off of the 660 to the 626, you're at what is that? 626 minus 650, right? 659, 626 divided by 659. Yeah, that's almost a 10% drop, right? So we have seen a 626, 659.
So if you're a doomsday or whatever, you're saying like housing is just it's still too expensive, right? People can't buy homes. But I think you're discounting the fact that many people are in payments that are perfectly comfortable for them. And they're like, home values have gone up, right, over these years. Right. And they refinanced when interest rates were really low. And so the default rates are not going up, right? And so unless you have huge default rates, you're not going to have this crash.
Right. We don't have any, right. We have no default right now, which is, we talked about that.
Hold on a second. Like a month ago, you said it like tripled from like 0.001% to like 0.003%.
Yeah, I think we're right.
Hold on to your butt.
No, there was a big uptick.
We're at, for most of the time, we were under 0.5% foreclosures and short sales, and now we're at 1%. So, and normal,
huge jump.
Locally.
Oh, locally.
And out of that, normal foreclosure rate is 1 to 3%. So we're on the low end of the normal foreclosure rate.
Got it.
And we finally got normal because we've been abnormally low, abnormal. We've been abnormally low for that time. So prices are not going up anymore. We're not seeing appreciation anymore. We're seeing kind of flat to maybe slight depreciation.
Well, I don't know if you've been listening all day. Grand Slam used to be $199, and now it's $599. Yeah, right? Prices are still going up, Jim.
Now, here's the thing that was the weakest of all the counties was the median percentage of list price to original list price to sold price. Now, it got as high as 101% in some counties at some periods of time when we were at the crazy period, right? 101% was the average.
Right.
Like 2021.
Right. 2021, 2022, we're at 101%. Can you imagine you put your house on the market and the average person was getting more than list price? Right?
Crazy.
That's crazy. Right. Normal is like 95%, 96% of list price to sold price. But Palm Beach County, we're at 93% right now.
What are you averaging? Because you're usually like 96, 97. That's on the back of the
I got to tell you, this year I got cream this year, and I kind of talked about that. Over the last year, it's been bad. 78% of my homes sold in 30 days or less for 11 of my 13 years.
Oh, yeah.
But the last year, my numbers are all off the chart, and it's because of all these changes with the interest rate spiking and the buyers coming back and being very
some things are out of your
volatile.
control. And you just have to ride the waves.
Yeah, and I haven't done a statistic because it's making me sick. So I haven't done it yet. At the end of the year, I'm going to do it again.
Gotcha.
And find out and catch up to find out where we are.
But on the back of the card for Jimmy D, it's like we've been at like the 96, 97 mark for a long time, right?
We've been
maybe even higher.
We are at 90. Most of our stuff was getting 98, 97.5%.
You should switch up how you talk about that. You should say something like, I'm consistently 5 to 6% better than everyone else.
Yeah.
You know what I mean?
I make up the real estate commissions when you hire me.
You outperform.
Right? Like, I do.
So there's an honesty in all of it.
Yeah.
Right. It's not omission. It's not.
I mean, it's like anything,
but it is.
You can have an honest angle to it.
Well,
right?
if you're omitting things, you are being very deceitful. You're essentially lying, in my view.
Yeah, Jimmy just said he's off his game this year, but so is everyone else, and he's still.
But I like the way you frame that better. Yeah. That you're 5% better than most, which is it's a different way to look at it. Yeah, the same thing. Because not all realtors
here's a perfect example. We just closed. I forgot to do the shout outs this week. I'm not going to get into it, but I'll do it next week. Yep. Thank you, everybody. But We had a property in Port St. Lucie. It was on the market for a year. It started out at $550 and it ended as expired at $499. The seller called me up and said, I got to sell this house right away. You got to come up with the real number. I don't want to get creamed, but I want to get what everybody else is getting. I want to get it fast. Okay. So I was under a lot of pressure. This all happened like 2 weeks ago, 2.5 weeks ago, maybe 3. So what happened was I did an x-ray of the neighborhood. I called like 7 or 8 agents in that neighborhood that either had active, pending, or sold. And I really grilled them and asked them a whole bunch of questions. Well, why has your house been on the market 128 days? How many people are coming? Are more people coming or less people coming now than when you put it on the market?
Are people defensive?
Not if you do it the right way. I always call them up and go, look.
Why is your house on the market?
What
Well,
the
I'm
hell?
So long. What are you not doing? I mean, why would they hire you?
I'm saying it really fast right now to get through it. But I ask them all these questions. Usually the agents want to talk to you because they want to know what's going on too.
Sure.
Right? A good agent.
Maybe you have a buyer.
So when I went back to the seller, now it was last listed at $499. So he goes, what's the number? What's the secret number that's going to get my house sold? And I go $435 to $450. And that's a huge haircut.
Again,
right?
yeah.
But and they were like, wow. And I go, I would put it at closer to the 435 because that's going to be your bad day. And people will pull your number up if it's worth more and you're going to get it done fast. But don't go a penny over 450 because if you do, I don't know what's going to happen and you can't hold me. Right. You can't hold me to it. And then what happened was, of course, he picked 450.
Oh, why not?
Right. But in 5 days, we got 442. Right. In 5 days. Right. So I sold that house in 5 days and we closed in.
So who was right?
2.5, 3 weeks. Well, no, either way, it would have worked out fine. If he was at 435, it probably would have came out to 440 something anyway.
Yeah.
But he still got it. We had very good buyers. The agent was great. Thank you, Cheryl, for working with us. She was awesome. And we got everything done. And the whole thing closed in like 3.5 weeks from start to finish.
After sitting for how long?
A year. 1 year exactly.
Yeah.
And we put it on the market 7 days after one expired. Like there wasn't like a month downtime or 2 months and the market changed. It's like it one expired and boom, we put it back on the market again. Right.
I think there's also in that stat, like when you're at 101% or now there's also a little bit of an underlying issue, which is those, like when it was booming and they're getting 101%, their 100% might have been a stretch when they came up with the number in the first place. Like, this market's crazy. Let's just go crazy. I'm going to put it at 25,000 above the most recent sale.
That happened all the time.
These people are still hoping for some sort of higher number, but they're having to back down from it. It's interesting that your Jim's strategy is almost like put it at a number that's realistic and maybe gets pulled up still. Gets pulled up.
Johnny and I are going to, I don't want to talk about it because it's too good of a deal, but we're going out to look at a property today and we think that's exactly what they did. They put it way artificially low.
Sure.
Because they want a lot of people to come in and turn in offers.
Well, you had 4 people in a room recently look at it and be like, "Oh my God, check it out."
So
like
it's almost
they're getting the
we're all going to the open house today.
It's almost like a bait. It's almost like a bait and switch because we know that it isn't going to sell for that house, but you never know. So you got to go because you never know what's going to happen.
But it is a marketing approach for this listing.
Yes.
It is a way to do it.
Mm-hmm.
Should you bring Jimothy along with, and he can be like the guy who's like negative about the house? Right? Look at this, right? Like, look at this. Who wants this type of thing, right?
That's gonna be me.
Yeah.
I'll do it the whole time.
No, the 93%.
Can we leave already?
The 93% list price to sold price, just to put that in perspective, Broward, Dade, Martin, and St. Lucie were all at 95% or higher. So Palm Beach County is getting 2% less last month than the other counties.
We're just slower to accept reality in Palm Beach County.
The other thing that's changed, right? The other thing that's changed a lot is months of inventory. And with the months of inventory, Palm Beach County is right now at 5.7. The high is Dade County at 6.2. And Port St. Lucie's at 6 now. 6 months inventory.
I believe it. I get a ton of listings for Port St. Lucie.
And we're really seeing Port St. Lucie become much weaker right now.
Well,
and I was
tell
really
you,
surprised.
Can I tell you my
that.
instinct on vast majority of them is, oof, they're asking a little bit too much.
Yeah, that's the other.
That's my reaction every time. Like, oh, you gotta reel that in.
It's really turning into a situation where I'm looking at the houses online, and right away I'm like, oh, 35,000 got to be knocked off that house. 40,000 got to be knocked off.
I will click out and just make sure that it was. I'm like, this is Port St. Lucie, right? Because I'm like, this has got to be Palm Beach County. This is, and I'm go back in. It's all, yep, it's on, whatever. I'm like, huh.
There's a house that's for sale that's on California. It's right around the corner from the house, the new one that we bought. New construction home. It was built and for sale before our house was built. That's 2 years now.
Wow.
So, they started construction on our house about 2 years ago.
Mm-hmm.
That was already there. It's still for sale.
Wow.
And I know why, because it's price.
Yeah.
Is it owned by a builder still, or
I don't know who owns it. It's had several agents because I've seen the different signs over the years, but it's just been for sale this whole time. And again, it's 2 years.
Could be that they just can't sell it for below a certain number. So
but then you're carrying. That's the math doesn't work with that. I always get frustrated with sellers. It's like, so you're carrying it. That's a cost.
It could also be something like the vending machine thing where it's like, really, this is just it's just advertising for real estate agents. Like, hey, let me put my sign in your yard, and you're like, sure, I'm going to charge you every single month, and people are going to call you, try and pick up buyers.
But right? months of inventory. Here's what I wanted to talk. We've been talking about how the inventory's been shrinking on the MLS. Let's just look it up today, just for the heck of it.
Do they call that shrinkage?
Yes, shrinkage. Yeah,
the official term.
The market got wet.
It is winter.
Yeah, hold on here. Let me.
Well,
I just want to see how
depends
many.
on where you're at,
So we were at 60,251
Chile
last week. We were at 60,250. Okay, we're up a little bit, 60,481. Okay, so that's a variance. But we were as high as almost 65,000 homes for sale on the MLS at one point. So we're down quite a bit. And what that means is if less inventory is out there, less choices for the buyers, prices more likely to hold better for the sellers.
Yes.
So even though we're still in a buyer's market, in my opinion, the sellers aren't getting creamed the way if we were in a really terrible market and they were getting creamed, as long as you price it right. Right. But if people are still pricing it like COVID prices and think they're going to get that today, like even your house, Johnny, when we looked at your house a year and a half ago, we were really it was really healthy numbers, right?
I still feel like it's really healthy numbers, but it's all about perspective, I guess.
But it isn't the same as it was healthy. 18, right?
True.
It wasn't the same as 18 months ago.
It's a totally different market, and I understand that.
And it's still a very healthy number, like you said. You're still doing great, but it's not the same as it was. And people think that whatever they hit their peak number, they feel like that number is going to stick the whole time. But it depends on the market. And if the market changes, your number changes. So that peak could just be a peak, and you're not going to hit that again for a while.
Right.
But I always looked at it that maybe yours isn't, but what you're going to buy is also lower.
Exactly.
That's
the trade. When you're a buyer seller like that, it almost doesn't matter.
Exactly.
And to an extent.
Now the super sharp people will sell at the high and buy at the low.
Mm-hmm.
And then what you do in between, you stay at your other house, John.
That's right.
Right. So, but how do you do that as an average, you're just a normal family, like making the next step. And so, yes, Johnny recognizes that even though his house maybe could have sold for more last year or 2 years ago, whatever it was, the house that you're buying is also in the same predicament.
Right. Exactly right.
And so to Jimmy's point,
that's right.
It kind of doesn't matter. It's your life. It doesn't matter to me.
Whatever. They lose out. But I think anybody that feels like they timed it right is you're just
you got lucky?
The result of luck.
Yeah,
that's just it. I mean, you got lucky if that's the way that worked out for you. But I don't view it any other way than the way I should. Truly. I mean, I still feel like, it's not the peak of the market, but we're still, as far as appreciation goes on my home, I'm still doing well. Right. Remember, we refied and did some cash out.
And the thing you have to, what people should worry about right now is I mean, you always keep an eye on the interest rates a little bit just to see where they're heading. But the real thing that's going to determine where the economy is heading, in my opinion, I've been saying this for years and years, and thank God for years and years, this number has been very strong and healthy, and that's employment, right? Once we start seeing unemployment, I'm still thinking the sixes. When we get into unemployment in the sixes, we're at like 4.1 right now, right?
Which is about where we should be. That's right
very
where we
healthy,
want it.
very healthy. So, but if we get up
but
to
I feel like
6%,
that number's off, by the way.
You think it?
Yeah, I just don't feel like everybody's staffed the way they would be if we were only at 4% unemployment. Walk into anywhere and you're like, where is everybody?
Yeah,
you go to like a Target and
there's nobody. There's nobody
Actually,
there.
I just went one of those places recently. I couldn't find anybody.
So I don't know how they, again, those numbers are always kind of skewed in one weird way or another.
I feel but we don't have huge unemployment, people going on unemployment.
On unemployment. That's right. And I guess that's the best gauge is how many people are pulling from actual unemployment. But I just don't feel like places are fully employing people.
I think you guys are shopping at the wrong place. I go into like, what's the soap place in the mall?
Oh, Bed Bath and Beyonce?
No, like you go buy like scented soaps and like hand soaps.
No, you go buy.
You walk in there, you get swarmed. There's probably like, I don't know.
Well, yeah, we got
15
they start rappelling out of the ceiling,
right?
Yeah,
like it's just like overstaffed. I think a lot of those retail places
they earn
kind of like that.
They earn on commission. That's
you
why.
walk through the mall and you got those kiosks and they're just like hounding you. Like,
totally.
Just like, you know,
that's the one thing I will tell you. If you go through, and I'll be at the Wellington Mall from time to time. I am always stunned. Now it may vary mall to mall. Stunned by the amount of people walking around the mall.
People too.
Yeah.
Like, wait, who
and
goes
certain stores are just always busy, and there's some that you can imagine.
I think it's Bath and Body Works. Is the,
okay, there you go. That sounds good.
Oh, okay.
Yeah.
But yeah,
Jim,
stunned
you don't
by
shop
the
there?
amount of people.
I could smell that. I could smell that.
Knowing how much attention he might get.
So, as we mentioned earlier in the show, we're having more cancellations of contracts than ever recorded in the history of the United States by NAR, National Association of Realtors. And
that's a national stat.
National stat. But it's just as common down here. And the trend is we're part of that trend. But the thing that's interesting about that, I had to negotiate something 2 days ago, and it was it was a very touchy situation. The family had their house on the market for about 130 days. We had tons of showings on this property. Nobody would turn in an offer. Everybody complained that the downstairs living room layout wasn't what they wanted. And there was nothing anybody could do about it, right? That was my second time I had a layout problem recently that we just could not solve.
You can't like move a wall.
Right, you can't. No, there was nothing you could do. It's basically you had a very small living room downstairs and a loft upstairs. So it had basically the two living rooms that people like to have.
But you had to go upstairs.
The living room was so small that you didn't feel like it was a living room, and you just felt.
You just call it a den? Is that a solution?
No, the way the layout was, because it's open to the kitchen, and you didn't know where to put the TV and your couches and everything.
Oh, that's a tough one.
So what ended up happening was we finally got an offer. We reduced the price, and we got an offer, and we took it right away. Well, we gave them a seller concession. We gave the buyers a seller concession as part of the deal, which means that we're helping to pay for the prepaids and the closing costs and down payment for the
not down payment
for the buyer. So what happened was they went and did the inspection and they asked for another credit, and they wanted some repairs done besides the credit. And my sellers were like, really, we kind of acquiesced to everything they asked for at the beginning. We really didn't counter them. We took their original offer, and now they're asking for more. And I understood where they were coming from. And I also felt like what they were asking for was a little too high. They wanted to clean the AC. There were a couple of cracked tiles on the roof, but they wanted a couple of $1,000s. And normally when I negotiate, I usually try to do a lot. I have a lot of tools in my toolbox that I normally use for that. But what I was more concerned about with this family was if we negotiate this and they say no and the buyers just walk away, how are my sellers going to handle that? because that's a real thing that happens in today's
They
market.
got to start over.
Yeah, and buyers will do that. Nope, you're not giving me what I want. I'm gone. And there were 8 other properties for sale in this neighborhood.
And even if they won't ultimately do that, they could still posture that way. Like they're in
Mhm.
that position of kind of
Right.
strength where they could threaten walking away.
So-
and it's more scary for the seller. than
So
the
I
buyer.
had to tell the sellers that I felt that they should just go ahead
Acquiesce.
and acquiesce. We did get a little different. We saved them a little bit of money, hundreds of dollars, not thousands. But we didn't cave in, but we kind of caved in. And I was like, what you have to understand is, and I said, I'll do whatever you want. There's no wrong answer. But you have to understand, if you make this counter and we don't know the people on the other side, if they get emotional, just say they want to walk away. Or they already have an eye on another property. It's like, if we don't get this one for this price, we're backing out to go do something else. You got to be prepared and be okay with that, because you can't go, oh, I wish I didn't do that.
Right.
So they decided to go ahead and move forward. And I really feel like that was the best deal for them. And let's talk about deal killers that are happening across the country right
Would you
now.
say you have the top 8 for potential?
Yeah, I have 8. I
buyers?
don't know if we'll get to all of them, but we'll try to hit as many as we can. Number one is when you're dealing with new construction, they can't finish the home on time. Okay.
So this number one is like most
I'm
common?
not saying that. No,
Oh, no, okay, I
these
got
are
you.
just
No
8 things, not
particular
in order,
Okay,
right?
got it.
So I'm just reading it based on the article. But number one is when the contractor, the developer can't build the home on time. Now I'm going to put
Cancel
a little.
a contract?
Oh yeah, but I'm going to put a little asterisk on that one, because what they didn't mention in here, at least the developers down here, most of the contracts I've read for developers, they tell you it's going to take 9 months to build, let's say. But even in Jimmy's contract, it said they had 2 years past that.
2 years. Yep.
2 years past the 9 months.
Mhm.
And you could not back out of the contract for not completing. So they had 2 years, 9 months to build that house, right? And that's
Wow.
buried in the contract. So that's one of the reasons why contracts are dying.
Jim, is that a result of COVID? Some of that a result of COVID? Because of because that was one
supply chain.
that was one of them.
well,
supply chain.
yeah, but I understand that was issues, but
I mean, so it happened prior to 2020.
My dad worked for developers down here since the 1970s,
Okay.
and they had long term, like, hey, if we
Okay.
can't build
Why
it,
not?
yeah, it isn't just the supply chain.
just
It's just,
protected
it's an
themselves.
offer you can't
it's
refuse.
just right.
Yeah.
It's just an out for the developers. to
Yeah.
But there
make
were
sure they're
definitely
an
like
in.
windows
It's an
and
in for
doors
the
that were taking
developers.
a long time.
Yes, sir.
Okay, number one.
Another issue is financing or timing, right? So
Financing or time.
yeah, now what they say, most of the time sellers are also buyers and are trying to navigate their next home. If the seller's new home contract falls through, they may have to cancel the sale or avoid temporarily being homeless.
Mhm.
For buyers, it's good to know about this detail from the seller up front, so don't be afraid to ask. Also, what I would say with that, get it in writing.
Yeah.
One of the things that we do, because they're talking about seller buyers here, but they're not using the seller buyer terminology,
Right.
because I made that
That's
up.
Well,
myself.
you also have to think like contracts are different state to state. And so the Florida thing, it's pretty standard. Like if you don't have a contingency about selling your property, like your chances of losing your money are high.
Yeah.
It's possible in other states, and I've seen that because I operate in other states where the earnest money deposit is almost never at risk. Like it's just like
if you don't
can't
close,
lose
you
it.
get the money
Yeah,
back.
yeah, you can't close it. So
There
I mean,
was one
it's-
state.
Point of it then.
There
then
was
it's-
one state recently where you have to give an escrow deposit and then like an earnest money deposit, and there, which I know is the same thing in Florida.
Yeah,
But one of those deposits is
non-refundable. I've seen
non-refundable.
that.
Regardless.
I forget, and it's a state thing. It's
I
like-
think it's Carolina.
I think it's one of the Carolinas, but I don't know if it's North or South.
It's
think it's
not
north.
south. Must be north.
I think
North.
it's north.
Yeah.
Yeah, and that's crazy town.
Yeah.
Oh, I remember one of our customers was moving to North Carolina, and they told me, they go, that's not right. And then I found out it was
Yeah,
right.
it's
I'm
North
like,
Carolina.
wow.
Yeah.
It's I mean, I guess it eliminates non-serious
Yeah.
people, right? Or
So-
just people with some extra
So
cash.
financing or timing issues, that's the whole seller buyer thing for most people, is that, hey, how am I going to sell my house if I don't know where I'm going to live?
Right.
Or how am I going to put money on a house that I want to buy and I don't know when I'm going to sell.
But I don't think financing would come into play whether you're a buyer, seller buyer or not, just a buyer in general. If your financing falls through, well, there goes the deal.
Well, that's going to come up later, though. That's a
this
different
is more
type
about
of
the
thing.
timing.
Yeah, this is the timing with the financing. Now, inspection and repairs, obviously, right? So that's the number one reason before all the time. That would be the number one reason why deals fall apart is inspections, right?
Yes.
Now, the next one would be financial burden, which I think is very interesting. There are sellers out there that don't know the true cost of selling. And I saw this recently with one of the customers that we were working with a buyer. And the seller was never given a seller net sheet. And when they found out what they were actually going to net at the closing,
wasn't enough.
It wasn't enough, so they wanted to back out of the contract.
Did I tell you about that? Because we had that with
you had that.
Yeah.
You had that, but I had something like that similar. But I think yours is more recent, Mike. To be honest with you.
Yeah, they just they forgot us. There was a small detail that they, basically a loan that they would have had to pay back when they sold that they didn't consider. And it put them in the red. Yep. So you can't sell if they're not making any money.
And that's like those PACE loans.
So it was the property assessed clean energy loan. Yeah.
Yeah. So that's a thing. Another one, and this is probably the number one reason I believe that we have these high cancellation numbers. Straight up cold feet. Either the buyer or seller is like, you know what, I'm not feeling good about this market. I changed my mind. I don't want to sell.
Hey, you got to follow your gut.
Do that, right? So that's
see a lot of that.
I've seen people get
buyer's remorse.
Not in contract, but I've seen buyers decide I don't want to do it anymore.
I could definitely see, like, as the contract progresses and you go through your inspections and your appraisals and maybe difficult negotiations with sellers and people kind of get adversarial with each other, then the cold feet. I don't want to buy this house. Like, the signs are all pointing to no. Why are we going to proceed with this?
Right.
So I see, you see that in the end, usually it closes and it's fine.
Even the magic 8-ball says don't do it.
But like Jimmy says, like, it's very easy to get emotional with these things. And when you let the emotions kind of take control of the logic or the practical realities, you can get that cold feet scenario.
Yes. Unrealistic expectations. This is usually because the seller is expecting to get a certain price and they're not getting it. I don't count this as part of cancellations, even though it's in this article, because this is before you go into contract. You're getting offers and you're not happy. I'm not going to take that number. I'm not going to take that number. I'm not going to take that number. Multiple offers turned in, but they're not in the range you expected them to be. So that would be a reason why the seller says, I'm not selling it. But that doesn't tell me why. Maybe they're talking about the cancellation of the listing agreement in that case. I don't know. Then multiple parties required. This has happened to me a couple of times recently where you have feuding people that own the same property and they don't want to do the same thing with the property.
Yep.
So one person wants to sell, the other one doesn't, or they don't want to sell at the price that the other one's willing to take. And it turns into a big fight. I've been dealing with that recently.
You see that a lot with like families that inherit properties, divorcing couples, probate issues where relatives are involved in that. And here's one that you might not know about. Let's say if you're married but you're separated, like you haven't lived with this person for 13 years, they're not on title to the home. If you're still married, they got to sign off on the sale. That's right.
Even if they're not on title.
That's right.
Yep. Is that a Florida law or is that
yes?
I had to do that when I got divorced. My
which time?
Ex-spouse, I know, right? This is number 2, Mike. This is the one number 2.
So even if you own a bunch of properties prior to being married, and you never incorporate that into the finances, and then you're separated, you go to the divorce, you have to have your ex sign off.
They have
to it's a homesteaded property.
Oh,
I think
it's
is
primary.
Part of
Okay.
No, I even think
investment property.
Yeah, I think you have to sign an agreement that you're acknowledging that that the spouse is doing this.
Selling.
Yeah, even though that you're not on title or anything.
That feels
you have to
junky.
do that. Because that's what happened to me. They had to call me and say, hey, will you sign this document because I want to buy something.
Well, that's when you're buying. I'm talking about selling.
Oh, when you're talking about selling. Yeah.
If you're trying to buy a primary home with a mortgage and you're still married, like maybe your divorce hasn't finalized. Right. Very common for that to kind of the timing issue.
Right.
Your spouse has to acknowledge that you're buying a primary home with a mortgage. So that you sign a piece of paper called the mortgage. But what caught me off guard was the selling side. Let's say you owned it. You're not, your spouse is not on title. You haven't been lived together. You're separated. You just never like formalized your divorce. Your spouse still has to participate in the sale.
Interesting.
Yeah.
Hey, Jimmy, do we have time to squeeze in the call?
Yeah, let's get Mark on the air with us. He said the topic was being hornswoggled, so let's see what he's got to say about that. Mark, welcome to the show.
Great start, by the way, Mark.
Oh, thank you.
Hey, Mark.
I've been listening. Hello. I've been listening for a long time, and we just had to cancel our contract, and mainly it's because I think they were trying to hornswoggle us. What happened was the lender said that it needed a roof before they would close, and I made the offer of, we really like the location, so I made the offer of, okay, well, we will pay for the roof at closing if the seller will, get a roof put on. And they said, well, we know somebody that will certify the roof. And if they certify the roof, then your lender will sell us or, lend you the money. Or go with our lender and they will definitely lend you the money for the house. And I just felt very uncomfortable.
Yeah.
I felt that being hornswoggled.
Yeah, I could totally understand, Mark. I would be very concerned if I were the buyer's agent and I was representing you. I would be very concerned about you doing that too, because it looks like you're just trying to jam it through, and you're going to have a headache afterwards.
Yep.
How much was the roof? Do you think the roof was?
Well, it gets worse than that. Literally, my seller or my buyer's agent offered me her roofer to certify the roof. And that made me feel really uncomfortable.
Yeah, because you need to know if the roof's really certifiable or not, and you're being initially told no. And
I already had it inspected.
So they just wanted to jam through the deal, right?
Gosh.
They just wanted to jam through the deal and not worry about your long-term issues. Because what would happen, Ross, if they went ahead and did that and they did get it certified that way?
First we're going to need a 4-point inspection on the insurance side to make sure that the roof is okay.
But
if they say it is okay,
right,
you get a 4-point inspection that says it's okay. The insurance company is still going to go out and do their own inspection, and they may look at it, because we've had it happen in the past where we get comes back, says it's got 5 years left, photos look okay, and then when the insurance company goes out there and does their inspection and puts their eyes on it, then they will find there's the potential that they could find something and then come back and say, hey, you need to replace this roof.
And that's why you need to have an agent and an insurance company and a mortgage company sit there and tell you about all this before you make a decision, instead of having an agent saying, hey, we'll just get somebody to say the roof's okay so you can buy the house.
Yeah, because on the flip side, it could be like, hey, do you really, on the devil's advocate side, do you really want this house? You understand that it's got a bad roof?
That would be a different situation, right?
Like, hey, can we get you through closing knowing that you're going to probably have to put on a new roof immediately? There's a possibility that with 30 days from now, you could be looking at putting on a new roof.
Yeah, I would say it's not uncommon to run into inspection issues kind of this nature. But this one is, you just, unless this is addressed, you're not able to close.
Yeah.
So then it's like, okay, well, do you want to buy the house? Are you comfortable with the conditions of whatever the repair is and when it happens? Are you comfortable with that? And is there a way to get it to happen? It sounds like your people were kind of angling towards that, like, hey, can we get this to the finish line?
You got to explain how that would work, and what the potential
risks and all that.
We can get you through closing, but it may not stick.
I don't even know if we have a minute left, but I got to ask you this question. Did you get your money back, Mark? Did you get your deposit back?
Yes, I did. It was like a 12th or 23rd hour deal. It was like, we have to cancel now. We're not going to get our money back.
Yeah.
And so we canceled at the last minute. Yes.
Did the house sell?
Just wouldn't. It's back on the market. It's at the same price, and they're going to have the same problem, in my opinion. We had to go with Citizens. We had a 4-point. We were going to end up having to put the roof on within 30 days, anyways. The seller just refused to put a roof on, even though I was willing to put. I think it was going to be like $15,000. It was a small house, 1,000 square feet. I was willing to put the $15,000 in escrow for them to have it closing to pay for the roof, and they still wouldn't do it.
That's crazy, Tim.
That is weird.
That's crazy, Tim.
I feel like that's a layup or finger roll, as you might call it. You know, that's like
Frankly,
done
I
and
think you could get that
Slam
deal
dunk.
done
Yeah.
still. I still think you can get that deal done if you go back. If it's still on the market just sitting there, you probably could work it out.
Yeah, you just had to
It
get out
sounds
of
like-
it before you were stuck. Now you can start
yeah, you could
renegotiating.
actually go back and take a second bite of the apple. You're in a strong position right now.
Yeah, and maybe should. Brother, thank you for the support over the years, and thanks for being a part of the program. Have a great rest of your weekend.
Thank you.
All right,
Thanks,
my
Mark.
friend. Always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. If you need pros, experts in their field, if you're looking to buy a home, sell a home, stuck with a home, you don't know what to do, anything that touches the world of real estate, we have a professional for you. Remember it. Know it, use it, love it, share it. It's FloridaTalkRealEstate.com. You got a hotline, you can call it 888-973-7828. We're on Facebook and YouTube. Give a like, give a share. You can absolutely change lives, including your very own, with the pros of FloridaTalkRealEstate.com. Like Mike Rauch, the mortgage guy from the mortgage firm. Have a great weekend.
You too. Thanks, everybody.
Always a pleasure. Like Ross Komarinetz with Brightway Insurance, Juno Beach. I hope you have a great weekend.
Thank you. I'll do my best.
And there's Jim DePaula with the Florida Home Pros team, Keller Williams Innovations. I hope you have a phenomenal weekend as well.
We're going to have a little trip right now.
Yes, we are.
Yes. Okay.
Yeah.
Talk to you later.
Party at the
Nice.
open house.
Woohoo!
Yeah.
Timothy, you're the best. my dude.
TYL.
Have a great weekend.